The oil market is set to end the week with losses on increased bearish bets amid signs of swelling global supplies and a weakening demand. An increase in the US gasoline inventories is a clear warning sign of a sluggish demand from the world's largest energy consumer. At the same time, American crude exports to Europe and Asia are nearing a record 6 million barrels a day. However, economic uncertainty in China, the world's largest oil importer, suggests that energy demand is unlikely to recover anytime soon. Yesterday, Brent crude oil hit a new local low despite a slowdown in its downward cycle. Given that the asset is now deep in oversold territory and traders will sooner or later start looking in profits on their short positions, a rebound is just around the corner. The benchmark may bounce back from the 71.5 and 72.5 area, which acts as a potential support. Based on fundamental data, oil traders will probably take a wait-and-see approach, with a quote standing still at the current levels until the middle of next week. After all, the upcoming meetings of major central banks are now in focus, and the US Federal Reserve is set to discuss monetary policy on Wednesday, and the European Central Bank's meeting is scheduled for the following day. Considering that the rhetoric of policymakers may shift and they may comment on the upcoming monetary policy easing, the market situation could change dramatically. Until then, auction in the oil market could hit a brief lull as investors await these big events. Sharp price fluctuations are possible only in the case of some unexpected news. While oil is just trying to move sideways, gold has been stuck in a range for quite some time. By and large, gold has been trading flat for a week now in anticipation of the upcoming meetings of major central banks. With investors increasingly expecting policymakers to begin easing monetary policy, gold has a chance of recovering to the $2,100 per troy ounce area. If the yellow metal consolidates above the 2050 mark, its bullish run could continue. After a sharp jump and attempts to rise as high as 94 rubles per dollar, the Russian currency pulled back to around 92 rubles per dollar as a part of a correction. Its behavior is similar to that of oil, which has had a significant impact on the Russian currency recently. Considering that gold is expected to remain range-bound until the middle of next week, the same goes for the ruble. That's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us. And see you soon!